Welcome back. Well, just keep an eye on the market. The mid-cap index, for example, earlier there used to be gap downs and mid-cap index would be the first to turn in green to give the market signal. The reverse could be happening nowadays. The mid-cap index is beginning to underperform a bit, though advanced decline is still holding firm, but mid-cap index gains down to just about 0.1%. And, it will be interesting to see if that actually starts to slip into the red, then what happens from that point on. But let's start our special segment, Charting Trends. We have Gautam Shah joining us, founder and chief strategist at Goldilocks Premium Research. Gautam, hi, good morning. Thanks for joining us. So our market has been outperforming, right? There's a debate out there whether the US market makes significantly lower lows for this year. We are almost there for the US market. But in India, we are nowhere near that. We're still 10% off our June lows. Do you think for our markets we hold that?
Good morning, Anuj. Well, there's a saying, a rotten apple spoils the barrel. And I think this is quite applicable with what's happened in the last 1 month. If you really look at the equity market basket, you have rotten trends everywhere. So many markets in the world have made new lows for the year, which is obviously not a good place to be in. And India pretty much was the apple of the eye of most market participants. But about time we corrected in sync with the rest of the world. And that's exactly what has happened in the last 1 week. So I think we are in a short-term downtrend, no doubt about it. The global equity market trend is not good. There's so much happening in the currency market, in the commodity market. And I don't think this is a plain vanilla correction. While you could see some pullbacks from time to time, but I still feel on a relative basis, India will be an outperformer and it will continue to stand out. But the problem is people are so used to seeing India do consistently well, despite global market weakness, I think they are going to be disappointed. So just for the time being, the area around 17,000 I thought was an important support. We've respected that and we are seeing a bounce today. I don't think we are seeing significant upside from here because 17,200 and 17,500 are important resistances. And on the downside, if 17,000 were to break on a closing basis, then we could actually go down to the 200-day exponential moving average, which is around 16,800 and eventually 16,500. But the key taking point is that we're just going to spend time in a range. Rallies will find selling pressure and the market has just lost leadership. If you look at banking, Reliance, the IT index, there is nothing that can actually propel this market higher.
Yes, so 200 exponential moving average on the Nifty, as you said, the 16,800 perhaps becomes in question. Now, I'm looking at the Bank Nifty's averages, Gautam, because that was the one which was outperforming. And it's still holding 50 exponential moving average. The 200 here is a good 2,000 points away from here. Do you think this outperformance continues?
No, I think the Bank Nifty is going to see further downside. Yes, it did outperform for about a couple of months and it saw that massive rally from 32,500 to 41,800. But let's not forget 41,800 was the upcycle level. It just tested there, and it just, fell off the cliff. And because the rise was so large, there is a lot of room to fall. In fact, 38,500 was our working target, which was tested yesterday, and we are seeing a bit of a bounce. But I just feel it's going to be a bounce. Eventually, 38,500 might get sold into, and then we lead to 37,900 and maybe even lower. So I think the Bank Nifty needs to retrace the rally of the last 2 months, which is going to take some time. And if I look at the top stocks, most of them are looking overbought to quite negative on the charts.
Okay, Gautam, hi, good morning. So take us through some of your, stock ideas. In the sense, where do you see some caution? Where are you cautious now? Which are the stocks that look overbought? Which ones could move into negative terrain?
So that we've already lost a lot of ground. I think in the last couple of days, just about everything has come off. Nothing has been spared. Now the big question is, can we go deeper? I think we will go deeper, but after a pullback. Now, if you look at high beta, that's the space that looks quite weak. So banks, I think, have more potential on the downside. The metals index is looking quite weak, so that could see some near-term weakness. Capital goods, which had a great rally for the last 3 months, is also looking quite weak. Some of the other financials, on an overall basis, I think are looking quite weak. And Reliance Industries, unfortunately, a stock that did not do well in the good times is getting, hit very badly on the way down. And it just seems that this stock is going to take the market down further. So I think some of these pockets, which are pretty much high beta, is where, weakness is what I see.
Right. Any levels in mind broadly for aggregate indices, Gautam? Hi, good morning. Eventually, where you think that we will get to by the end of it?
It's a very dynamic world, Prashant, but I think I'm more keen on looking at what the US does from here because, our working target on the S&P 500 was 36, 3650. We have tested that yesterday, and I think it's been a very big down cycle for that market. And it is because of this US market behavior that India has eventually fallen. We really don't have as such any concerns to be falling very, very big from these levels because, mind you, 13,000 crores is still coming in every month. And therefore, I think that's going to cushion the fall at any point of time. But if 3,600 on the S&P stays protected for the time being, then I think there is a possibility of a bit of a bounce. But broadly, if you were to ask me over the next couple of weeks, I think we're going to spend time between 16.5 and 17.5.
Okay. The problem pocket for the market has been the Nifty IT, Gautam. Despite the last couple of days of relief rally, that clearly is in a bear market now. And after good, very strong 3-year bull market as well, do you think it needs to give up more gains from here on and, before it becomes sort of buy again on charts? Because on a longer term chart, it would still look a bit extended, right?
I would actually have a slightly contrarian view, Anuj, because I don't think it needs to give up more gains. If you look at most of the top stocks, they are down 40-50% from their highs. I know if you look at it in the context of the entire rally of the last 2 years, it might still seem small, but without any major change in fundamentals, we've already seen a very, very large drop, particularly in mid-cap IT. And I think this outperformance of the last 1 week and the fact that 26,500 has actually held out in such a difficult environment gives me some positive vibes that maybe this index is trying to bottom out. Again, no clarity on the charts, so there is no momentum, there is no reason to buy for the short term. But if you're a long-term investor looking at value, looking at risk reward, IT might be a good place to be buying at these levels.
What about ITC? I know we keep talking about IT, but ITC has really taken the top honors, right, this year. You see a further uptrend there, or do you think that now, the run is done and perhaps it's best to just take profits?
I think we are halfway into its run. I think there is clearly a lot more upside for that stock. I think we've been a big bull on ITC for the last 1 year now. And we have it as one of our long-term picks, and I think it will continue to rally. The kind of relative strength the stock is showing is fabulous. So ITC and HUL, I think, are two stocks that I think will try and hold this market from time to time. And if you have to buy relative strength, you buy into them. So the key takeaway is stay invested and use these market dips to top up in these stocks. I think they are going to do much bigger things because the underperformance carried for many, many years. So outperformance cannot just continue for 6 months.
Okay. Have you tracked some of these moves in cement stocks, Gautam, of late?
Yes, Anuj. In fact, just a couple of weeks back, we actually covered 2 cement stock ideas, both linked to the Adani Group, ACC and Ambuja. And I think, they have a good future from a medium-term to long-term perspective, purely from a charts perspective. I think we like the way it's setting up. This market correction is a good opportunity to top up in them. So yes, go ahead and look to initiate longs in both these spaces. And even as a basket, look at what India Cements has done, JK Lakshmi. I think some of these structures are very good for the medium term. The problem is the market is not supporting right now. The moment the market supports, I'm sure cement will come back well.